Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to today's edition of Benzinga's Pre-Market Prep for Wednesday, February 1st. Can't believe it's already the first day of February. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we are talking, of course, about Apple. It's the biggest earnings report of the day. We're going to cover that, as well as AMD, U.S. Steel. Facebook has earnings later today. We're also going to talk about Twitter and those drug stocks. First, though, today's show is brought to you by Chaikin Analytics with their groundbreaking stock research tools, including the proven Chaikin Power Gauge rating and stock discovery engine. Chaikin Analytics simplifies complex investment decisions, and it's all presented in an easy-to-understand platform that's up on the screen right now. To learn more, visit ChaikinAnalytics.com/premarket. That's Chaikin, ChaiKin, analytics.com/premarket. You can see it up on the screen. That's what the platform looks like. And we have a chart of Apple up. The Chaikin Power Gauge is neutral on Apple, but we should look at our chart and get some technicals from Joel. So Joel, how are we doing in the S&Ps this morning? And then we'll get to, of course, the big one.
The correction is over. It was like a day correction. S&P's back up 5.25 points. Pre-market high 81.50. Continued upside. Monday's high was 85.75. Coming back on the downside here. Let's see if we can find support mid-range on the day. That would be at 22.75.5. Crude just hanging out again here. Trading range, we're going to have to figure out which way it's going to bust out here. Still hanging between 52 and 54. Also, gold showing life again here. Big resistance in gold. You got to clear that 1220 level for another leg up. Dennis, how you doing on this Wednesday morning?
Just chilling here, looking at a little rally in the market there. Is the bear market over?
I mean, it's a correction. It gave you. I mean, you see.
But 2%. That's a bear market now because we don't get corrections more than that, right? Didn't they change it from 20% to 2%?
Yes, they did. And you know what? Double bottom S&Ps. You know, we talk about formations and stocks. We talk about same thing in the index futures. Double bottom. 63 was your low on Monday. 62.25. That was your low. Boom, right back up at 22.80.
So looking here, driver. Is this all Apple, you think? Apple driving the market? Because the market did take off when Apple reported earnings there last night, and we are up here again. I think it's all Apple, don't you?
That is I'm looking at the top 10 components. They're all in the green. Apple up, of course, 4.5% compared to just a little over 0.25% for the index. I see all the other 10 components in the green as well. Amazon's up, Google's up. So I'd say 75% Apple, but you do have the other components trading higher as well.
What about those straddle writers in Apple? They know what they're doing. We talked about it yesterday, just being under $5. And look at the move in Apple. It's $5. Those straddle writers, they're good, Joel.
How do they do that?
I don't know. They're good. You know what? The only time they're not good is when I participate and write the straddle. And, I write it for 20 points when it's a $500 stock. It goes up 70 points. So if I don't participate in the price discovery process of the straddle, it'll be priced correctly.
All right, let's just take a look at Apple. Spencer, you want to? Did they make $100 billion or something like that?
They usually do.
Something like that, yeah. Q1 EPS of $3.36. That's a $3.22 estimate, so a nice beat.
Wow, they make money.
Nice beat. Sales $78.4 billion versus $77.38 billion. Nice beat as far as Q2 rev goes. They see that at being at $51.5 to $53.5 billion. 53.9 was the estimate, so a little lower there. Let's get into some individual metrics, though. They reported about 78,000 iPhone units for Q1, up significantly from the 45,000 number in the last quarter and 74,000 in Q1 of 2016. iPad units down slightly, Mac units up slightly, but the iPhone number blew it away.
Fuzzy's saying they have 260 billion in cash now here too. I mean, this company, when you knock out the cash, it's just valuation wise is cheap. Now, obviously, we know like they're very dependent on the iPhone. We're gonna have Gene Munster on here at 8:35, and the new Piper analyst coming on, Mike Olson as well, to talk about this transition of what Apple might have to do to start getting away from the iPhone. But man, is that iPhone a cash cow for them right now? Those numbers are awesome.
All right, just giving you the technicals here real quick. You got your pre-market high. We're trading right near that, 126.86, and I'm going deep into my technical bag here to look at the daily charts, and you have a gap to fill up to 130.32 here. This was this. I can remember this report because I bought 125 puts like the day before, and or some puts, and it opened up higher, and then it ended up coming back down. So 130.32, that fills a gap from July 21st of 2015. I guess you're just using half and whole numbers, when you get up here. Maybe you got someone lurking at 127.
The numbers have always been good. Everybody seems to always want to hate on Apple, just probably because it's the most valuable company in the world, just probably because, everybody, and the stock has been an outperformer and everybody wants to call the top on the thing. But I mean, from a valuation perspective, this is why I have it in my invest portfolio. It's one of my biggest investments. And, and Jim Cramer says all the time, how about just owning Apple, not trading Apple? I say, how about doing both? How about own Apple and trade Apple? But, it's just an incredible company. I mean, but, it is very dependent on the iPhone. And, Gene Munster's going to say some stuff, where he sees, potential smartphones going away in 15 years on our 8:35 interview. And that's going to be very interesting because obviously if that happens, Apple better make a pretty huge transition over the next 15 years. We'll have to, find out if Gene thinks they can do it or not. But that being said, right now, just Apple just makes money. You got to think like, with that cash, you net out the cash. Even if they milk this for another 3, 4, 5 years, there's still so much, cash there. Like it's just so cheap, when you net out that cash.
Yeah, it is cheap, and it's always had that kind of valuation on it. Just have to look. If you got it in your portfolio, congratulations. All-time high, 134.54 if you absolutely have to find a crazy number on the upside.
Let's jump over to some Sympathy moves here. So obviously some of your parts makers there moving up here this morning off the Apple report. And Apple's moving the whole market, so you can say the whole market's moving in Sympathy. But you want to jump into a few specific companies here that move along with Apple. One is SWKS. This is one that Skyworks solution that a lot of people follow with Apple. When Apple has a good report, SWKS gets a lift. Has a bad report, SWKS sells off. SWKS, which had its own good report just a week and a half ago when it had the gap and go from $85 and it's settled and consolidated to 92, is trying to break out two new highs here on the move, Joel. 93.69 is where it's trading at this morning. This is where it levels where it traded back about a year and a half ago here. SWKS, quick technical thoughts on this one.
All right, trading up substantially here in the pre-market high. This is one little tick there, 93.95, looks like an odd lot. Let's see. You do have a recent high at 93.78, so we'll keep an eye on that. That was your January 25th high. Above that, you're going back to levels. It's funny. This peaked at 95.75. That was in 2015. That was about a month before Apple did. So there's another level above the pre-market high, 95.75.
Also, Cirrus Logic, SCRUS, is trading up $1.50 on the report. Again, it got the big lift last night, right after the earnings report there. And CRUS is trading right up to the level where it traded January 24th, which was 5 days ago, up at that $62 level. That's where we're kicking around. We're bid at $61.90 here right now. Somebody offering at $62.30. That's right a penny above that high. So you can tell some people, even the pre-market traders, look at the old highs, and that's maybe where they have the out. So, this guy maybe bought it on a pullback here. I was looking to dump it at that old high. Joel, is that a good move?
I mean, it depends. Put it out there, Dennis. We talk a lot about, levels and things like that. But what's better than having an order out on the market and see if someone gobbles it up like that CSX guy, right? Remember we talked about that? And see if you get hit. But there's your number, 62.29. That actually represents the all-time high in Cirrus Logic.
I'll give you the argument why you don't put the order out there in the pre-market, because it's 2,000 shares. It's a huge order this person
That's
has
too
out
big.
there,
Yep.
and it's too big for the market right now. So that makes the stock look weaker than it maybe should. If I was trying to sell 2,000 shares, I'd maybe use a discretionary order or something. Maybe throw it up there at 64 or something and put $1.70 worth of discretion if you want to sell it at 62.30. But when you put it right there at 62.30, it almost looks like you're blocking it. It makes me think, oh, maybe the old high is going to hold. There's a psychological thing too. So, in the middle of the day at noon, when the market's all thickened up, your orders aren't going to have as much impact. But when the pre-market, those orders can have a hell of a lot of impact. So maybe this person doesn't want the stock to go higher. Maybe they're throwing it out there just saying, hey, 62.30 is where I want this stock to stop at, and that's why I'm throwing the order out there. We don't know the reasons, obviously, behind why a person puts an order out there. But I'll tell you, if you want to sell a stock, sometimes the worst thing you can do in the pre-market is to throw an order out there and have it sitting there, because that order can actually have an impact on what other people are thinking, off of, especially when you've got, this, moving up on Apple here, up $1.43. Maybe people are going to buy higher than that, but when you throw 2,000 shares out there, some people think twice about that.
I didn't hear you say it was 2,000 shares.
It's a big order.
That's huge.
Even 100 shares. I don't like showing my hand at all. When I'm trying to sell stocks, I use a lot of discretionary orders. And a discretionary order, a lot of your retail brokers have it too, is simply an order that's priced outside the market that has discretion on it. So, for example, the example I just gave on Cirrus Logic, 62.30. If you put an order to sell it at 63.30 with $1 of discretion, it will hit any bid that comes at 62.30, 62.40, 62.50. The nice thing about that is maybe I want to sell at 62.30. Maybe there's no market. Maybe somebody bid 62.80. So now I get an extra 50 cents off that. That's why I love using the discretionary orders. I use them all the time. And if your broker has those, it's a great tool in your toolbox.
Yeah, we talk about the different orders, and great point there. All-time high, Sears Logic, 62.29.
Jumping over to other earnings report here, Ace has pounded the table on AMD, and yeah, this was a wild one on its report. It got hit, and then it started to rally. So, it's funny, you can have these reports, and sometimes there's fake outs. And AMD did get hit for the first few minutes, but it's rallied hard off of the lows. Ace is saying over 12% off the lows, which is impressive there. Spencer, how did AMD do?
Q4 adjusted EPS of a 1 cent loss versus a 2 cent loss. Estimates, so they beat it by a penny. Sales of 1.11 versus $1.07 billion. They see Q1 sales down 11% quarter over quarter, plus or minus 3%.
And the stock was wild here. It has come back, though, and I was watching NVIDIA with it, and there's some algorithms. I'm telling you, there's algorithms that are now pairing NVIDIA with AMD because it was moving so smoothly with the AMD report. You could see NVIDIA getting hit like right away, like in milliseconds here. So there's some algorithms that have a pair trading software going with AMD, and they were hitting the NVIDIA off the bat with the AMD report. As AMD started coming back, the algorithm simply just starts buying it right back too. Why I say it's algorithms? Because it was so quick. I don't think a human, unless they're really supercomputer brain, can respond that quickly. But it totally looked, and the bids and offers were moving algorithmically as well. You can tell, when the bids are changing that rapidly and they're looking similar, especially after hours, you can really tell when it's an algorithm or not. And there's definitely some pair traders that have AMD and NVIDIA, the pair algorithm running. Joel.
I'm here. I just
You
muted
mute trick
here.
again? Is that the old mute trick?
Yes.
I don't see how a computer could be. I mean, that's amazing, Dennis. You really think that they're just equaling up the dollar amounts on that, and then
Yeah, I think so. 10-1.
Having a
Pretty easy to do.
Yeah.
I mean, you got a $10 stock, you got a $110 stock, and these two companies, are similar, but they're not like, it's not like it's risk arbitrage. It's not like it's arbitrage here. It's statistical arbitrage. So there is, and I've said it before, NVIDIA and AMD do trade off of each other. And you get AMD tanking, it will impact NVIDIA a bit. Now, I don't know perfectly, like they seem to have it, trading like that. And if you put the two charts on top of each other, they look very similar. I mean, you put the dailies on top of each other, they both topped out on the same day back in December. They both, probably made their low. I haven't even looked at it, but they probably made their low similar to where, that same day was just back a week and a half ago there. So they do trade very closely together, and the algorithms kind of fulfill that.
Ace, what do you think about the $11 level here? We haven't quite reached it in the pre-market. You have a high going back on January 12th at 11.04. You also had a high just above the $11 level that was on just a few days ago at 10.98. Small gap to fill there. So I think see if there's some size there at 11. Above that, things open up to like 11:20, 11:30. This is a big, thick stock here, so I'm keeping an eye on $11.
If you're coming in here and looking at Citrix Systems this morning and saying, whoa, what happened with CTXS? It's down 20%. Don't panic, though. Don't panic. It's a spinoff. So CTXS actually isn't down 20% here this morning. It is now, the spinoff is complete, and shareholders who are holding it overnight are going to get 0.1718 shares of LogMeIn, which is OLOGM, I think. Yeah, LOGM. So it's not down 20%. Don't panic. You're getting shares of LogMeIn, which 0.1718, which probably approximately add up to that 20% fall you're seeing in CTXS.
All right. So, and what's the symbol of the other stock?
LOGM.
Okay. All right. So
LogMeIn, I've used that a few times. It's a software that basically you can log in, from anywhere. So you can log into your computer from your iPad. So I could access my PC from my iPad by going to LogMeIn. So if you have certain programs, that you can't get on your iPad because it's not an app or whatever, you can use a LogMeIn app, and then that will access your entire PC at home. It's pretty cool.
I would say I've used this too. Super helpful when you have a parent or a grandparent who does not know what they're doing. You can just log into their computer.
You can log into their computer and show them exactly.
And do it for them. Yep.
Yeah, it's cool software, but I mean it's priced to be cool too. I think LogMeIn has had some incredible LOG. I'm just going to quickly doing the technicals on this one. This stock has been a monster. We are right near all-time highs on this thing, and really 2016 when everybody was throwing it out everything at the beginning of 2016, we got down to $35. Stock, is now 108. So you're talking about a triple since the 2016 lows, which were just 10 months ago. So LogMeIn, incredible performer. If you're looking at overhead supply, there was some up there at that 110 area. You have multiple highs. And always when you see three highs in the same area, makes me think there's a big institution that's trying to sell a piece. I'm talking about the three highs from January 24th to 26th when we topped out at 110 on the kisser, 109.95 and 109.80. So makes me think that there might be some institution sniffing around trying to sell a big piece of stock up at 110.
all right. Yeah, I see that 110.10. That's your level. We came up there 1, 2, 3, 4 times.
Jumping over here to other earnings reports, and there's a ton of them. And like we said, in earnings season, it's difficult to get to all the earnings. We're going to have some days where I think there was 90 companies that reported, but we're going to get into the real heart where we're going to have 250 companies reporting some days next week, and we can't get to them all, obviously. So we highlight the main ones. If there's any specific company you want to talk about in the chat, let us know. Let us know in the chat, and we will talk about it. But let's jump over to U.S. Steel. This is another wild child here. U.S. Steel got the big pop and then the drop, and it's been funny, the fade trade on some of these earnings reports, we've talked about it already, we were talking about it yesterday, has been working well. And, here you see U.S. Steel gets a big lift after hours on their earnings report, and it gives it all back, and now it's kind of trading flat here. Spencer, give us the details.
Q4 EPS of a 61-cent loss versus a 32-cent gain estimate. So or that was in Q3. And they also see fiscal year 17 EPS at $3.08. That may not compare to the $1.86 estimate, though.
Joel, what are you seeing? How high do we get after hours, first of all?
You've had a big spike in X here. I don't know if we're going to get back up here. 34.73, that represents the high. We're back down at 33.06, so I think that high is going to be protected here. That 35 level is important, 34.94. That was your high on January 24th. I mean, you haven't even got through your 3-day high yet, 34. So, man, it's backed off that quite a bit. Yesterday's high was even lower than that. You need to hold 33 here before you even get really excited to start thinking about 34.
Jumping over to other earnings reports here of interest. Did we get the Best Buy report yet? Are we still waiting on the Best Buy numbers? Because I have not seen the trade here yet.
Brentster,
we're
Best
waiting
Buy
on
numbers
it. 8:30.
Yet? No, nothing.
I don't see him.
I think it's 8:30.
Dennis,
so anyway,
you have to be short this going into this report, right?
I thought that last time I would have got killed. The thing went straight up. I mean, Best Buy has been resilient here. We talk about Amazon eating lunches of companies, and me and Joel have egg on our face on this one because we've been saying Best Buy's got to be getting their lunch eaten by Amazon here, but they're fighting back. And I mean, they matched the Amazon pricing. I think it was Herb Greenberg that made a good point on Twitter there. I saw go by my timeline last earnings report. And he's saying, well, look, you could go on Amazon. you could find your thing on Amazon and then go into a Best Buy and buy it at the Best Buy and have it immediately, and they will match the Amazon pricing. So, that's a consideration there. Like, I want this thing today. I don't want to wait till tomorrow when, we have the overnight shipping come in. I've got a Best Buy store, they're kind of everywhere. I've got one 5 minutes from where I live as well. So I can find my product on Amazon, print it out if I know it's at the Best Buy store, and go in there and hand them the sheet, show them that, and they will match the pricing. So maybe Amazon is becoming the showroom for Best Buy, Joel.
I like it there. If you can buy it cheaper online, you can always do that. But I'm the guy that a buck or two and I need it immediately. I go in there.
Yeah.
I like them. They're very, very helpful there. I'm not a huge, don't buy a whole lot of stuff. But let's take a look at Best Buy here. And if you go into rally mode, folks, a double top here at 45.36 area. If you go into reverse mode, a double bottom at the 43.40 area. So a couple days of tight ranges ahead of the report.
Just remember last time you could see the gap in the chart. The stock went from $40 up to $47. So it's not out of the realm for Best Buy to have a 3, 4, 5-point move. That was a 7-point move off the earnings report. So just be careful. Best Buy can be a wild child on their earnings. We'll find out in about 10 minutes. Hopefully they're going to come out here and we'll have the numbers for you. Just want to jump over because we're going to run short on time. We'll come back to the earnings if anybody wants to focus on a specific stock. But I got a lot of other stocks on my list to talk about. And one is Twitter. Twitter showed some life yesterday. Got a nice lift there yesterday. Call it the 2-day move. You kind of had a reversal day. You could even call it the red dog reversal of the three previous days there when you made a new low from the 3 previous days and then made a new high and closed at 1710. 2-day move comes into play. Stock opens near the lows and then she runs and runs and runs. She goes all the way up to 1762.
I'm in.
You're at Joel's benefiting here from this Twitter run. I'm not in. I still don't like Twitter about valuation, but I'll tell you short term, man, it's got a little bit of life. 18 big overhead supply, though.
Dennis, this is one of my favorite formations. I love this. You had a 9-day trading range with an exact double bottom, or not quite exact double bottom. 1636, 1633 was the low of the move, and then you had a trading range between 1633 and 1714. That persisted for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So it took out the top of the range. I went in. I didn't do weeklies. I didn't even do Februaries. I did Marches. I like this kind of. And I thought about you, Dennis, and I thought about the 2-day move and the earnings report. I hope I'm not talking too much.
Why didn't you mention to me about the 2-day move? Why didn't you mention on the show yesterday the 2-day move?
Because I didn't know.
I didn't notice that.
I didn't know. Well,
you just noticed and you're like, bang! I gotta get this 2-day move.
Actually,
you were quick to make the trade, and then it was gone.
Actually, I think that the move. I think it could be a 3-day move, obviously, because you didn't move up. You moved up 30 cents on that one day from 1657 to 1694. But I liked the volume yesterday. There was a move on heavy volume. Their next report, I don't think it's until February. I just think, you had the tail end of the Olympics, and then you had the election. I think they're due for a good report. I'm not buying this because I think it's getting taken over. Because that's not
$18. That's where you had support back in November, December, multiple times bottoming there. Like you can look at the dailies, and you can kind of jumps out at you. And I think, if I subscribe to the old theory where old support becomes new resistance, it's where I think there's going to be some people willing to take off a piece there. So short-term resistance up at 18, maybe we can blow through it. But, that's where I'm looking at. I'm seeing 25 more cents maybe here, maybe even today. But I don't know. I'm not a believer.
Can I get a steak dinner back? Can you please? Can I at least put it out?
You want to make another bet on Twitter? Okay, I will offer you another bet on Twitter.
Okay, go ahead. Put it. Lay it
up.
One
problem is rumors. Rumors throw you out because somebody will break some. We're due for some rumor here again, where somebody's sniffing around on Twitter, and it'll probably eventually pop to 20 because of that rumor. Stay there for 2 days, nothing materialize, and go right back to 18. But that'll be enough to get you out. So I have to go high enough not to get shaken out by the rumor. I will say, what's 1262 seems low though. I was going to go 5 points up, 5 points down, but it's easier for it to go 5. When we're going that far, we almost got to go percentages because it's easier for a stock to go up 5 points than it is for a stock to go down 5 points. At 1262, the stock starts to get just dirt cheap. So, I will say, no, you know what? I can't do it. I'm
Okay.
trying to find it there, and I can't do it. It's kind of in the middle of nowhere. I'd love to be, like I said, 18, short-term resistance, but really, 20. If you look at all the highs up at 19, that was where the major resistance was. So no trade for me on Twitter. Can't do
Okay.
it. In the middle of nowhere.
This is just all right. Then I'll just go with one of my wayward predictions. Okay.
All right.
This is gonna fill these gaps up here someday. I know. Maybe even 2017. This has to trade up here. It's just the chart is just begging for this. I don't know if it's going to get all the way back up to 25.
Doesn't have to do anything.
It's going to fill these gaps. It has to trade in between 21 and 23. When that's going to be, I don't know. But this chart,
When it'll do it when it reverse splits.
Oh, getting funny here. All right. Spinner. Also, we should mention if you were watching your trusty Benzinga Pro yesterday, huge call buyer came in there. Of course, you don't know whether if they were short or not, but there was a huge call purchase here yesterday. Someone bought the March 3rd 17 calls. There was 5,000 at the ask, and they lifted it. That was versus an open interest of 160. So we'll see if that call buyer is right.
Let's move away from Twitter and move into the drugs, because the drugs got hot yesterday too. I guess it was buy all the garbage yesterday type of day, because Twitter had been on the dump and all these drug stocks had too. Nothing bad happened in that Trump meeting. You didn't say anything bad. So that's the good news for all the drugs here. Pfizer got an ace lift yesterday. Eli Lilly. Allergan. Look at this one. AGN. I do own Allergan in my investment portfolio. Huge spike yesterday. Stock is hanging out around 209. Sleeping Giant tax on 10 points because Trump didn't say anything bad.
Looking at the chart here, Allergan 220 is a nice level. You hit 1955 yesterday. You also knocked on the door when you traded in the 219 handle. So there's a level. And boy, oh boy, look at this was definitely a red dog reversal here, because I guess if you're going on the dailies here, you took out the previous day's low at 1075. Went to 937, but boy, if you would have been buying that, there were 4 lows right there at the 211 area. I guess that's past history now, though. If in fact it can clear 220, next level I see is 2243. That was your high on January 11th.
There was a big lift in Eli Lilly too. They did have earnings as well, so that could have been a little more of a catalyst than the Trump stuff for LLY. But LLY closed near the highs. It opened weak, and they started buying this stock too. Opened right near the lows. And if you were buying the drug stocks right on the open, a lot of these drugs opened near the lows and rallied all day. And Eli Lilly was another one, and it's trading up here again in the pre-market.
Oh boy, I wish I would have had this on my front screen, because we did talk about that $74 level. Look at that.
Yeah.
You had all those lows there. Went through the 74.17 low, but when it came back through it, never looked back. 77.28. Just watch out a little bit ahead. I see us trading at 77.50. Pair highs at 77.71 and 77.62. That was from Jan 18th and 19th. Potential resistance.
Yeah, big rally in all the biotechs as well, like Celgene, Stock Hunter's talking about it. Even if you look at the BIB, which is one of the indexes there, it's a little bit. I think it's the double. Anyways, BIB, you can see the big lift in there yesterday from 40.42 up to 43.65. Straight up at 44 here again this morning. So drugs showing a little bit of life, like I've been saying. My portfolio is overweight this sector, my investment portfolio, and it has not done. The investment portfolio is underperforming because it's probably overweight in the drug stocks there. But that being said, my investment portfolio and time horizon on there is 20 years. So, I just look at them as being cheap. I think eventually they're going to start to turn it around. I don't know when, but, it's a lot of these drug stocks like Gilead, a lot of these drugs like I bought Allergan just recently there. I threw in a flyer on Sarepta. I don't know what's going to happen with that one yet, but, a lot of these drug stocks are very cheap, and money was flying into cheap stocks yesterday.
Weekly chart here showing the IBB here. 1 year we've been trading between 240 and 300. I'll tell you, if this thing ever gets over 300, I think you can get really excited about this. Trading in the middle of the range. If you're doing some long-term investing here, you know where your out is if you breach the 240 level. But for 1 year, this thing has been consolidating between 240 and 300. That's a pretty looking chart there. We'll see if and when it can clear 300.
Okay, opening imbalances just came out. You see some big moves here in a stock like Coca-Cola. Coca-Cola just got the beats right now at 8:30 because it just came out with a 122,000 shares sell imbalance. Don't tell me this information doesn't move stocks. Full disclosure, I am short Coke. I shorted on the Jim Cramer pop last night. Jim Cramer was pumping Coke and saying, I like Coke. And I was like, you know what? Coke trade up 25 cents because Jim Cramer likes it. That's a big move, and I decided to take a short position overnight. And it looks like it's trying to pay off for me because it's coming in here right now with the big sell imbalance this morning. You see this happen. This looks like a risk on day. We talk risk on, risk off. I talk it with you guys all the time. Risk on, risk off. Well, you can see right now S&P futures trading higher. Financials are very strong here today. It looks like an obvious risk on open here, which means TLT is trading weaker, which also means XLU. Look at your utility stocks. They're trading very weak here this morning. And Coke is a more defensive name. So I don't care. Maybe Jim Cramer likes the setup here. I don't, because this morning this is a risk off day and Coke could be weak just because it's more of a defensive play. Now, I had a good day yesterday and Coke had a nice pop. So I'm just looking at this as a very short-term scalping play, but Coca-Cola here trading down the pre-market. Procter & Gamble 77,000 to sell. That subscribes right to the risk-off theory. It's trading down a little bit in the pre-market. Johnson & Johnson 43,000 to sell. AT&T 247,000 shares to sell. That is a huge sell imbalance for AT&T, one of the biggest ones I've seen in a long time. That's going to put pressure on that stock here at the open as well if that sell imbalance remains. So you got a few big ones out there and some of the defensive names. Another one just out of the blue, Abbott Labs. 150,000 to sell in ABT. That's interesting. Stock just trading down just slightly here in the pre-market now at 41.70. These imbalances move stocks.
All right, the Coca-Cola, are you going to try and cover at yesterday's low at 41.36?
Probably the open. I will
Probably.
probably cover it. It depends. You got to look at this and say, wow, are we really risk off today? Maybe we start to come in. What's yesterday's low?
Yesterday's low 41.36, 2-day low 41.20.
I would cover in there.
Yeah. Okay.
Yeah, if I got back in there, I'm looking at this trade. You could short it. I was short in the 70s last night when Kramer was pumping it there, and now I'm looking at it back here. Around 41.54, 41.40 is probably not a bad cover. And if it, that sell and balance sticks, that's probably where it opens. So I'll probably cover it on the open. This was an overnight trade.
And
Just fade Jim a little bit. I don't always fade Jim. Jim makes some fantastic calls, and I give Jim Cramer a lot of props a lot of times. Just last night, Coke, it's a little bit overdone. It's not even about fading Jim. It's just about people get too excited and they're chasing him up and buying Coke up 0.75% last night because Jim Cramer likes the chart. Does that not seem a little bit, too overdone?
And for those of you that want more details on the fade Jim Cramer buy and sell imbalance trading strategy, you can message Dennis on Twitter.
Yeah, there you go.
He patented that one.
All right, 8:33. We're going to take a quick break. Come back with Gene Munster.
And Mike Olson, Managing Director and Senior Research Analyst at Piper Jaffray. So we'll be right back with Gene and Mike.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Chaikin Analytics. We are joined on the line by Gene Munster, who is managing partner at Loop Ventures, and Mike Olson, managing director and senior research at Piper Jaffray. Gentlemen, we're here to talk about Apple. Gene, I'll go to you first. What do you like and what don't you like about this Q1 report?
It's a huge sigh of relief that the iPhone franchise is intact along with the profitability. And separately, it allows investors to start to fast forward and think about the potential around the iPhone 10, which is coming out next fall. And so we like that the business is together, and there's a lot of upgrades coming for the iPhone 10.
Mike, what about you? What do you like and what don't you like about the report?
Yeah, I guess I would add that, we think the December quarter iPhone beat just provides some confirmation of a thesis that we had, that consumers are generally just not aware of the 10th anniversary iPhone coming later this year, and therefore are not holding back purchases of a new iPhone at this point. So that should bode well for the March and June quarters. I think the other point I would make on the March quarter is Apple ended the December quarter at the low end of typical channel inventory amounts for most of their major products, including the iPhone and the Mac, suggesting that there wasn't any channel fill to drive results in the quarter, and there may be some channel replenishment that has to happen in the March quarter. So that could be a slight positive as well.
Gene, this is Spencer. You've said that the iPhone will be going away in the next few years. Can you explain to our listeners why you think that, and how Apple will be able to transition from a mobile company, right? The iPhone still makes up 70% of the company's revenue, from a mobile company to a more of a services/AR company.
This iPhone, as we know it, has a glass and aluminum in your pocket. Will likely go away. They may have another product called iPhone, but it will be or eventually some form of a wearable. And that's the big focus. Apple made 2 important patents in the last week around that. And so we think that the concept of your phone is just going to slowly go away. More importantly, I think that services, as you said, is going to become the way that Apple is going to leverage these hardware devices in the future. And so the substance of the growth is going to come from services. I know that Mike's done a ton of work on that, about the importance of services over the next few years. But that's the basic idea, is that it becomes a wearable and services become more important.
Yeah, actually, Mike, I want to ask you about that. You said that despite the increase in services revenue, you don't see margins expanding at all due to the increased cost of having to manufacture in the U.S. under a Trump administration. Did anything yesterday change your mind about that?
Yeah, that comment, we were really just suggesting that our model may prove conservative as a result of that, given we don't have an uptick in gross margin from services. I do think that there's potential for services, given its significantly higher margin than the core business, to drive gross margin improvements. And specifically, one comment that everyone's kind of focusing on from yesterday was that they said services will double over the next 4 years, which just looking at our model suggests our model's already somewhat conservative. That would suggest around a $50 billion services segment by 2020. And we're modeling for something that's about 15% below that. So I think there's room for upside in our numbers and consensus numbers as a result of continued growth in services.
And then this question is for both of you. Tim Cook called China a very difficult market yesterday. I guess I'd ask each of you, on a scale of 1 to 10, how would you rate the success of Apple's expansion into Europe and Asia so far?
I think so far it's been a 6. It had a really good run there with the iPhone 6, especially in China. And the units that they sold in mainland China were similar to what they did 2 years ago with the iPhone 6. But 2 years ago is not enough to warrant a great business. And I think at the end of the day, it gets to a bigger question, which is, what kind of market share do they want? And I think that they need to be more aggressive on their price. That would be a near-term negative impact on margins. But this gets back to the idea of moving to more of a services business. They need to release themselves from this idea that they need to make a lot of money on the devices, instead sell them more aggressively in emerging markets. And I think that would be good for services. And I'll turn it over to Mike.
Yeah, China is hard. We've seen other companies in our space try to enter China. Netflix is one example that just essentially said we're going to back out of our initiative to enter China for various reasons. And I think what we're going to see as a result of that is Apple's going to continue to focus on China, but also kind of spread their bets elsewhere. And I think that's where India comes into play, and we're starting to see them get more aggressive on that front. Tim Cook talked about beginning to open stores in India. That we know they've been working with local authorities there on kind of various potential tax concessions and things of that nature. So I think we're going to see India becoming an area that they continue to highlight increasingly going forward.
Aside from domestic manufacturing costs, are there any other ways that you see a Trump administration impacting Apple right now, at least the bottom line?
The other one is just on the immigration. About 10% of Apple's R&D comes from people who are on work visas. And so that's something that could have an impact down the road. I think that Apple's response to that is going to be similar to other tech giants, which is they'll probably just have more offices of R&D outside of the U.S. or expand those offices. But that's another very clear concern should be around the longer term health of all these companies.
Got a question about the cash here. Over $200 billion in cash, dividend, buying back stock. What about potential acquisitions here? I mean, what are they going to do with all that money? Gene, I'll direct that to you first.
I think initially it's going to be a buyback. We think that they can essentially, if there's a good tax holiday, that they could buy back an additional $20 billion, which would add about 3% to the stock. But I think that's the obvious one. Apple doesn't do big deals. They do small deals, and it's just not in their DNA to do big deals, despite comments that Tim Cook has had to the contrary.
Yeah, I would just add that, this came up on the conference call last night, but there's been constantly a question of what Apple's going to do in content going forward. And we had heard rumblings of an Apple television service, in the past, and it really never came to fruition. And it's hard. It's hard to get the content rights in place. So original content could be one avenue to go. Other content that's exclusive can be expensive, and this could be a way to invest in that area as well.
All right, so you don't see them doing a large acquisition. That pretty much sticks with the Apple model. Last question for you gentlemen here. Advice to the long-term investor that, let's say, he's been watching Apple, go to the all-time high, pull back. You see a big move today. I mean, just, long-term advice to someone that's not in Apple, perhaps a price target, something along that line.
Mike, I'll let you take the price target question. I think that the next 6 months are going to be a great time to own Apple, just in anticipation of the hype about iPhone 10.
I think Piper has the highest price target on the street right now on Apple at $155. It's a 12-month target, and I think you want to own Apple into the iPhone 10 launch in September. After that point, I think it's going to be a time at which you have to look out and say what innovation is on the horizon for the company, and if there's multiple different potential avenues of innovation to point to, I think it's one to continue to focus on, and if not, that may be a point at which you kind of revisit certain aspects of the story.
We've been on the line with Gene Munster, managing partner at Loop Ventures, and Mike Olson, managing director and senior research analyst at Piper Jaffray. Gentlemen, thanks so much for your time. We're looking forward to having you both on again real soon.
Thank you.
Thank you.
All right, Apple trading near the highs for the session. Our pre-market highs 127.24, currently trading at 127.20. Dennis, we'll bring you back in here. What a great discussion.
Yeah, I mean, it's the same thing in Apple. It's a ton of cash. They got to figure it out. Obviously, it's a little bit alarming when you hear Gene Munster saying, "Hey, the iPhone's going to go away as we see it in your pocket." So you got to transition. If that call becomes to fruition here in 15 years, Apple needs to make some significant transition into wearables like Gene is saying, and we know the iWatch didn't work at all, so it's got to be something a little bit maybe different. But I think they'll figure it out. I mean, they have a ton of money. There's a ton of smart people still working. You have a lot of people that always say, well, Steve Jobs is gone now, and he was the innovator, and this company is nothing without him. That's always been the argument against Apple. But the argument for it is they still have a lot of smart people put in place. Apple wasn't just Steve Jobs; it's the whole company that Steve Jobs put together. And I watched that 60 Minutes thing on them last year, and I keep saying they're cooking some other stuff up. Don't kid yourself. So, and it's a pun, but they're not just going to sit back and watch their cash cow fade away into nothing here. They got a ton of money. They got a ton of they're doing some stuff there behind the scenes, and I think we are going to see new products here from Apple eventually. And it's going to be there's going to be one in there that's going to be a blockbuster again, and they'll have a new cash cow. It was the same thing when we used to have, they used to be iTunes. Remember, before the iPhone, it was all iTunes. Who's going to pay 99 cents for a song? That's what we were saying back in 2005. Who's going to go on iTunes and buy this songs for 99 cents when it can download them for free? Well, you know what? It worked. And that was in iTunes. And then eventually we got obviously the went to the iPhone eventually, and it's been an iPhone company since. But there'll be something else that they're cooking up there. So I'm still a believer in Apple here long term, and short term looks pretty good too right now.
I just want to add real quick. What he said about the iPhone not being an iPhone as we know it, but so they might call it an iPhone, but it could be something else. Just remember that right now iPhone revenue is 69% of the company's revenue. They are an iPhone company. So whatever the new iteration is, we'll have to at least be able to match that.
Well, I hope they don't get rid of the iPhone before I figure out how to use mine.
The only one that can't figure it out.
You always help me though with that stuff when I can't get my the light off or something like that. But
the flashlight, Joel gets it stuck on. My battery is draining so quickly. Help me, Spencer.
And then Spencer does one thing. He moves it over and he just kind of gives me like this look.
Flip it up from the bottom. Press the flashlight app.
Yes. All right. All right. Enough of the Apple show here. 2.5 million shares have traded. Dennis, you attempted to short this thing at all today?
On Apple? I thought you say we're getting away from Apple. No, I'm not shorting Apple. I'm a long-term believer in Apple. I'm the Apple bull. I'm along with, I don't know if Gene's still a long-term bull here on it or not. It sounded like, he still, and obviously still believes in the company, but I don't know if I'm buying it up here, up $5.50 here now. Like I said, I've owned it since, for a long time here in my investment portfolio, and I bought more when it pulled back there to 110. I'm happy I did. I'm happy it's a big part of my investment portfolio. I'm not sure I'm buying it up here 5% here today. I think you get another shot. You're not in Apple.
Real quick, shameless plug, and I'm putting the link into our chat right now, but we posted part 1 of my interview with Gene, and we did it just the transcript. So I'm posting that in the chat right now. If you want to read about Gene's vision for the future, part 1 of our interview with him is in the chat.
And
Facebook.
All right, before you go to Facebook.
I jumped the gun.
I know, I'm sorry. This is the last point. Gene Munster was looking forward at the markets. How long ago, Dennis, did he start recommending Apple?
2004. 2004.
2004. Okay.
Coverage.
And now he is on a mission here to look for the next wave of technology. I feel like I'm peeking into the future here to see, because augmented reality, virtual reality. Spencer had a 45-minute conversation with him, and as he said, the first transcript is on our site, and there'll be many more coming. So, Facebook. Let's talk about another stock here.
Facebook, jumping over here to report tonight after the bell. It's getting a lift here. I mean, all the stocks are getting a lift. Apple's lifting everything here this morning. Facebook looks like it's going to be strong into the report here. I don't see any reason why this report wouldn't be strong. Again, the question is it going to be strong enough? That's always the question when you come into these things. It's had a pretty incredible run. I mean, Netflix, we questioned it, whether the report was going to be good enough, to actually have a gap up, and it did. So Netflix gapped up, and we've had the Google report, and Google obviously was strong, but now Google has shown some weakness here the last few days. So I don't know. I'm mixed on Facebook here coming into the report. I think it's gonna be a good report. I'm just not sure it's gonna be good enough.
I want to say one thing about Facebook. A very interesting headline yesterday from Dow Jones. They reported that Facebook is developing an app for set-top boxes such as Apple TV that could be used to distribute premium content and generate ad revenue. Premium content, that's the key word there. if you were to get like a Facebook app on an Apple TV or Roku, what does premium content mean? To me, that means television shows. That's what that means. So maybe Facebook's getting into the content game.
Dennis, without looking,
All right.
we went off the board here in the 130 handle. We're trading up $1.58. Take a guess on the 131 straddle.
$8.
Pretty darn close. A little bit lower than that. 350 and 3, so 650. A little.
650.
That's the expected move. Anybody that doesn't understand what we're looking at here with the options and the straddles, just hop in the chat. It's basically you're anticipating if you're buying both the put and the call, you're looking
Same
for
strike.
same strike. You're looking for a big move. But what you have to understand, you're buying the 131 straddle. You pay $7 for it. You need to move to over 138 or under 124 to capitalize.
Yeah, and it's always tough. Like, I think there's a strategy just to write every straddle all the time. I don't know if there's people who do that out there, but obviously you're going to take some big dings, so you have to have deep pockets to be able to, employ a strategy like that, because sometimes you're going to get those instances where I wrote an Apple straddle when it was $500 a share, and I wrote it for $20, and it ended up going to 60, so overnight. And that can, happen to you on these things. It's hard to, when you limit the risk when you're just flat out, selling the call and selling the put. But it seems like long term, most of these things work out. You're going to have those odd ones that really ding you, where you can lose 2, 3, 4 times your money that you had invested in the thing, or actually that you got from the premium that you wrote. But I just wonder if you wrote every single straddle all the time, if you'd make money. I think you would. I think you'd make a lot.
Doesn't Nick have a strategy where you could do that, but then
he buys up farther up? He protects himself so you don't get these outlier events that murder you. So he would, write that, but then he would buy, upside call and buy a downside put to protect himself against the call he wrote and the put he wrote, which is a smarter way to play it.
All right.
That's why Nick Shaheen, we have him on every Tuesday, because he knows how to be safe when you're doing these aggressive strategies.
BMY, 4 up days in a row, right? Let me count here. No, 3 up day. 3 higher highs, 3 higher lows, 3 higher closes. Let's see what happens here. You're trying to get into the 49 handle. You got a pair of highs at 49.51 and 57. 20, 30 cents away from there. I see that as resistance. I think just psychological here. If you really want to stay out of this thing and maybe think the selling's still going on, maybe if it gets above 50 and holds 50, maybe you get a chance to fill the gap here. But
I think there'll be a wall at 50.
Yeah, okay.
I think you've just come from 46. I feel like you're late to the party here now. It's already rallied 3 points from the lows, and you could say, wow, but look at this stock. It was, $60 just a week and a half ago. A lot of stuff has changed since then. So, you look at this thing. Yes, it's got a nice dividend here, but its valuation is a little bit higher than some of your other drug stocks. I mean, Bristol Myers kicking around last time I looked, and I haven't looked recently, so don't hold me to these numbers, but I think the multiple on Bristol Myers going forward was 17 or 18. On a lot of your drugs, it's 11 or 12. On a stock like Gilead, it's 6 or 7. So, you're paying a little bit more. And here's a stock that, obviously has some issues with their lung cancer drug and a lot of other issues as well right now. So I think, it's a dead cat bounce. It's it bounced off that low. It's getting a nice lift because Trump didn't say anything. All the drug stocks lifted yesterday. I think it'll struggle at $50.
And just one other thing of note, there are large institutions that, let's say they stayed out, they avoided this, and then they stayed out and they avoided all this noise. And then they get a move here, below how many standard deviations, they load up, they take a very large position, they lean on the low of the move here, and they're not looking for this thing to go to 52 or 53 or 54. They're taking a large position. Let's say they accumulated a couple 100,000 shares in the 46 or 47 handle. They're just looking for 49.5, 50. They could care about less about all these people that are stuck at 77, then got stuck at 64, and then got stuck again at 60. So different time horizons, different factors, going into the stocks. It's just not going to blow through 50 and go and fill that gap immediately.
We haven't talked dry ships yet today. I guess it's not day if we don't talk DRYS, the most volatile stock on the exchange. Always, it goes up 30% or down 30% every day. Yesterday was basically a double. from down at $3 or actually like $2.60 or whatever up to over $5 to close. Now it's $6.11. It's on the comeback trail here. Dry Ships is back, Joel. Dry Ships is back.
You got to buy it, Dennis. You got to buy it
I
there.
gotta buy it. No, I'm not buying it with my money. I'll tell you that.
All right, quite a recovery there. Let's just look at the dailies after that unbelievable, sell-off at 25 days in a row down or something like that. I'll just give you the pre-market high, and the pre-market high is 620. Looking at the daily charts, I mean, I'm just throwing a number out there, 765. That was your January 20th high. January 23rd, and then your 20th high was at 904. So there's some levels. Good luck if you're trading that one.
Wild child. Did we get the Best Buy earnings? Because I see it's trading up 30 cents here now, or did they decide not to report today?
I still don't see them.
Maybe I'm wrong. It was on the calendar, so I assuming that Best Buy maybe it was not reporting today, but I saw it on the calendar. Can anybody verify Best Buy is supposed to report here today?
No, they're not.
Well, why do I have it on my calendar then?
No, it's a month from now. It's March 1st.
Well, why the hell is it on my calendar? Oh, anyways, okay. I guess I don't know why. I wrote it down. I must have looked at the wrong month. So, Best Buy not reporting here today. So that'll take you for us. Sorry about that. So, okay. So 2 minutes left here. Analysis of the day. Financials are very strong here today. They've been weak here for 3 days in a row. We saw JP Morgan really get hit hard yesterday. Citigroup down, Bank of America down, Goldman down, breaking down a little bit yesterday. We're bouncing back here today. A little bit of, Apple helping the markets overall, but your European banks are helping as well. Deutsche Bank over there is trading up 3% in the pre-market. They always seem to be the leaders here on our U.S. banks. So U.S. banks looking strong here as well. Goldman trading up $1.68, JP Morgan up 1%. Wells Fargo is ex-dividend here today, so it's actually trading up even farther. It's up 1.2% here this morning. Wells Fargo is ex-dividend for 38 cents. So if you're looking at the WFC, its close yesterday was 56.33. The adjusted close is 55.90. And it's trading significantly above that right now, up at 56.63. So those dividend capture players are getting paid here in Wells Fargo. So those are strong here this morning. I've seen obviously your cyclicals, obviously some of your risk on stocks are stronger, and then I automatically think, well, what is going to be weak here today? What should we look at from the other side? And like I said before, some of your defensive stocks. If you look, the XLU and TLT are trading down fairly significantly here this morning, so automatically I think utilities are going to be weak. Automatically you think some of the tobacco stocks, maybe we did have MO report here, which we didn't get to. It's trading down in the pre-market, so that may put pressure on tobacco. Food stocks sometimes a little bit weaker. Sometimes AT&T and Verizon can be weaker as well. Full disclosure, I do shorts on both of those here this morning. AT&T, 284,000 shares to sell. Love that sell and balance in AT&T. If you're short for the open, obviously those numbers can change quickly though.
Just wanted to do a quick note here on Disney, DIS. We cleared this 110 level here, and call it a breakout, whatever. What I want to point out is the old resistance became new support yesterday. We talk about that a lot. You had the bust out finally through 110, came back down under 110 yesterday, closed at 110.65 here. So I know it's a big rally. I know there was a lot of downgrades on it, but still trading to the north here. I like it as long as it holds 110. Spencer, 858. What a busy show. Great job with Gene and Mike there. You want to wrap things up and preview Thursday's show?
Well, we got two guests tomorrow for you. Evan Schneidman, he is the founder and CEO of Prattle. They, of course, measure central bank sentiment, and actually a study came out last year that concluded that Prattle actually does a pretty good job of predicting what central banks are going to do, and they use text analytics for that. And then also we're going to be chatting with Craig Johnson. Joel, it must be Piper Jaffray week on the show, because Craig Johnson is the technical market strategist at Piper Jaffray. So looking forward to having Evan and Craig on tomorrow's show. Just want to remind you folks that today's show is brought to you once again by Chaikin Analytics with their groundbreaking stock research tools, including the proven Chaikin Power Gauge Rating and Stock Discovery Engine. Chaikin Analytics simplifies complex investment decisions, and it's all presented in an easy-to-understand platform. To learn more, visit chaikinanalytics.com/premarket. That's Chaikin, CHAIKIN, analytics.com/premarket. PreMarket. Thanks for listening, everyone. Hope you enjoyed today's show. Want to remind you that all the information, material, and content is for informational purposes only and not meant to be investing advice. Have a good day, everyone, and we'll be back with you folks tomorrow for some Facebook earnings, Craig Johnson and Evan Schnidman.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.